Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on Bitcoin, starting with the bearish scenario where we have a finished impulsive structure to the downside in 5 waves, 1, 2, 3, 4, 5, and look for a bigger correction to the downside in a wave 2. The most common target for your wave 2 is the 0.5 to the 786 Fibonacci, taken from the low to the high of 1, giving you a target between 61k and 56.7k. The 382 is an uncommon target for a wave 2 at 62.7k, and the 886 is very rare, you don't want to hit it. After wave 2, we're going to be looking for an impulsive structure towards the upside to break the high of your wave 1. Now let's look at the different Elliott wave channels that we have, the base channel, the trend channel, and the end channel, to see if this move towards the upside is a correct impulsive structure. Starting with the base channel pulled from the start of 1 to the end of 2 to the end of wave 1. What we want to see is price moving out of this channel, and wave 4 should revisit this channel like it has done over here. It doesn't have to touch it, but we do like to see a wave 4 getting close, which is the case over here. Now if we then look at the trend channel taken from the end of 1 to the end of wave 3 to the end of wave 2, then what we like to see in this case is price breaking the trend channel. Wave 3 is inside this channel, wave 4 breaks out, which validates or at least increases the probabilities you're looking for wave 4, and then one more wave towards the upside in a wave 5. If we then finally look at the end channel taken from the end of 2 to the end of wave 4 to the end of wave 3 most commonly, if price does not reach this channel at all, then you can also put it on the high of wave 1, but in this case we put it on the high of wave 3. Then what you can see is that wave 5 ended around the midline of the channel, which is perfectly fine for a wave 5. So when we look at the different channels, this move towards the upside can absolutely be counted as a valid impulsive structure, and we can then look for a wave 2 towards the downside. Now your alternative is of course an unfinished impulsive structure where we have a double 1, 2 over here, 3, 4, 5, looking for 4 and another 5 towards the upside. In this case, we want to count a 3-wave corrective structure to the downside, and if this low gets taken first before the high here at 67.5k, then we're going to be looking for a WXY and a move to the upside, where we then look for proof of support, because in the more bearish scenario where the high is in, we could have a multi 1-2 to the downside. More about that in a second. So here we have our box in blue for a wave 4. We were looking for a retracement to at least hit this box, and this box is taken from the start to the end of your wave 4, which is a common target area for a wave 4 of a higher degree, as the blue count is the higher degree count, 1, 2, 3, 4, 5. The lower degree count is in white, 1, 2, 3, 4, 5, sub-degree of this wave 3. Now then, with one more move towards the upside, we finish an impulse in a wave 1 and then start looking for corrective structure to the downside in a wave 2. So you can see that in both of the impulsive scenarios, we are starting to look for moves towards the downside as well, either directly in the more bearish scenario or one more move towards the upside and then correct towards the downside, which also means that the biggest move of this impulse is already finished. And the moment we get into 4 or 5 price action, price tends to move very complex as well, becomes more difficult. But what makes it a bit easier is that from a swing trading's perspective, it becomes more interesting to also start looking for short opportunities towards the downside. Now with regards to resistance to the upside though, in this scenario, we over here have the blue box 69.1, 69.7, and then we have a box around 70.9k. To the downside, we have this support box here inside this wave 4 target area, as you can see, 63.6k and 64.8k. Now the fibs that you see on my chart for this wave 2 are taken from the low to 70.9k, one of the resistance areas, and then look for a move towards the downside where these could be the targets, but of course we can be more precise once a wave 5 is actually in. Now, with this impulse to the downside, we can also pull two channels, right? Something that I've been covering in the past few videos, so I don't want to talk about it in detail. But what you can see is that for the base channel, we haven't really revisited the upper trend line, which is something we do preferably see. And we also haven't yet broken the lower trend line of the trend channel, taken from the high of 1 to the high of 3 to the low of 4, which is preferably something we see in an impulsive structure, or at least as a bare minimum, preferably test the lower trend line of this channel. Now, if we combine these two, then we can actually get a bit of a target area for a potential 4, which is this triangle you see on the chart over here, right? Now, this triangle is then based on the two channels. You can very easily put these on your chart as well and then observe price action in this triangle here. So the green one, again, taken from the low here to the low here to the high, and then the bigger yellow one from this high to the high currently on the chart to the second low, right? And then you can have this triangle and observe what price does here, as preferably we are going to move below the trend channel and towards the base channel inside the wave 4 box, and we do then have some additional support as well. Now, if we go to the lower time frame, right, and we jump to the 15-minute time frame, your bullish scenario here remains a double zigzag structure as long as this high is not broken at 67.3k, meaning we then have a wave W to the downside, right, a wave X, and we look for another wave Y, a double zigzag to the downside, where the target area is the top of this support box here around 64.8, 64.7k. However, something that we have to be aware of is also the bearish scenario. And the bearish scenario is the multi 1-2, where you have a 1-2, 1-2, 1-2, and you get a very big wave 3 to the downside, which supports the more bearish scenario of the two impulses that I have shown, right? Because then you expect continuation to the downside on a high amount of volume. So as long as price is not taking out this high before taking out the low, we're going to be looking for a WXY double zigzag or a multi 1-2. Now, what is important is proof of support, that if price does take out this low first, we need to observe what price is going to do, especially in this box over here. If price shows us some proof of support, meaning we don't just dump through it, because in a multi 1-2 you really want your wave 3 to be very strong and this support shouldn't really hold. But if price is going to range on top of this support, the longer it does, the better it is, and we see some signs of strength, for example a grind to the upside, changing market structure, bullish CVD, Elliott wave, impulsive structures to the upside, things start to become interesting, that is when we can look for a wave 5 towards the upside. If we do not see any proof of support, we're going to be looking for price to move towards the downside, right? Now, just to show you the WXY double zigzag on the chart as well, here you have your A, B, C, and W, X, and your A, B, C in a wave Y. Now, what does support the probabilities of a WXY compared to a multi 1-2 is that in the multi 1-2, your first wave 2 hit the 886, which is a rare target for a wave 2, but it is a common target for a wave B. And in this scenario, we label this a wave B. So the probabilities of this move towards the downside here would naturally be a bit higher for it to be a corrective structure instead of an impulsive structure, which therefore would increase the probabilities for this price action over here to be a wave 4 and then still look for a wave 5 to the upside, compared to this being a multi 1-2 with a finished wave of 5 here and a much deeper retracement. But then again, I think what is important is to always look for signs of strength. Something I finally want to note as well is if price hits the 886 here locally, then the probabilities increase for price to take out this low, and that's when it becomes interesting to look for that WXY or the multi 1-2. Now, we do have news coming up here at the end of this week, so please trade safe. Thursday tomorrow 25th over here at 2:30 p.m. Central European Time, and also on Friday 2:30 p.m. Central European Time. We have some high impact news, might increase the volatility, so please make sure you trade safe. And if we then finally look at the probabilities of the different scenarios, then on the number one spot we have the unfinished impulse, and there is two reasons for this. First of all, we have a then double 1-2 here, and a double 1-2 is a higher probability scenario compared to a leading diagonal as per Elliott Wave International. And we also have an 886 touch here at the high, which is common for B or X but rare for a wave 2. However, preferably we still look for a bit more downside even in a more bullish scenario, this one here, as we preferably break the trend channel, and we still have some good support to the downside of course as well, which is very interesting indeed. And then on a close second, we then have the finished impulsive structure where we have a leading diagonal 1, 2, 3, 4, and then our wave 5 to the upside. Now what is important is the context. In both of these scenarios we are looking for price to move towards the downside. The biggest move up, your wave 3, is already finished in both of these counts. Of course, in the bearish count, of course, it's finished because your wave 1 is in, and in the bullish count, your wave 3 is finished, and you only look for one more high in a 5 and then a move towards the downside. So from a swing trading perspective, as we are now moving into 4-5 price action, it starts to be interesting to look for those moves towards the downside. Now locally on the 15-minute time frame here, as long as this high here at 67.3k is not taken and we make another low, we're going to be looking for either the WXY double zigzag or a multi 1-2, 1-2, 1-2, 1-2, but as explained, the multi 1-2 would have lower probabilities due to the 886 touch we have here, and a WXY, if we do take this low, would have a higher probability. But what is most important for me is that if we do take this low, we look for the reaction in this box. In a multi 1-2, you look for a straight line down, and in a WXY, you want to see support, hold, move to the upside, and see signs of strength. If we do move to the upside and take out this high first before taking out the low, then the multi 1-2 is also invalidated, which increases the probabilities for all of this over here to be wave 4 price action, and still look for a wave 5 towards the upside. I hope that this video was helpful or valuable to you. Please check out the brand new complete Elliott Waves guide playlist I've made that shows you all you need to know about Elliott Waves. Thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.